Hello, ladies and gentlemen. Good morning, and depending on whichever part of the world you're tuning in from, good afternoon and good evening to you all. And welcome to another promising edition on the Forex Morning Mastery, our end of the week review, as we are going to be going into the financial assets we have been monitoring since the beginning of the week to see how well these assets have been doing, and of course use the historical data we have on the chart in conjunction with the fundamental drivers behind the scenes to make strategic decisions ahead of today's trading session. And it's also important for us to understand the fact that today is the last trading day of the week, and it usually comes with its own peculiarity. As we all know, market participants will want to be rounding up their trading activities ahead of the weekend. And what this simply means is that we are likely going to be seeing some reversal setups today. As you all know, market has moved in a particular direction through the course of the week, and we may likely see market participants start taking some profit off the chart, which could result in reversal setups. And of course, we are going to be taking this one too into consideration as well. And it's also important for us to note that last trading day of the week also comes with its own level of volatility, as majority of market participants round off, and it's a very beautiful time for us to strategically position ourselves for those big moves that are likely going to be happening today. And in preparation for today's trading session, I do have interesting, insightful trading setups as usual that we are going to be using to navigate the current market dynamics after taking into consideration the fundamental factors behind the scenes. So I encourage us all to stay tuned in so that you do not want to miss out on these interesting ideas that we are going to be deliberating on today. And before I go any further, I was not able to share some my commentaries as usual this morning on both my TradingView and Telegram platform, and this was due to some technical issues that we were trying to sort out during the course of this morning, but unfortunately we were not able to do that. But anyways, we are going to be looking at that together this morning in the session as we prepare for the end of the week trading activities. My own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host, as I will be taking us all through a trading journey where we shall be elaborating on try to understand the behavioral patterns of market participants with the utmost intent of identifying potential trading opportunities. So stay tuned in and do not miss out on any of these ideas. And for those of us who are joining us for the first time, you're highly welcome on board. Very excited to have you around with me this morning. And it is normal for you to wonder what this is all about. What is it that we really do here on the Forex Morning Mastery? So let me put you all in the picture of what the Forex Morning Mastery is all about. So during the Forex Morning Mastery, let me say first of all, the Forex Morning Mastery was an idea that was born out of the necessity to do live stream follow-up details on the trading ideas I usually share during the weekend. So during the weekend, I share a couple of videos giving you an insight and detailed understanding into what my thought process are on this respective asset as I prepare for the new week. So during the Forex Morning Mastery, we come here 3 times in a week to do follow-up details on this asset. That is Mondays, Wednesdays, and Friday, trying to get an insight into the market, use the information we have to manage our existing position, and of course, strategically position ourselves for the next move. It's also important for you to note that this is not a signal service platform. Instead, it's an educational avenue where we get to understand the behavioral patterns of market participants in the market, and of course using that information to position ourselves for the next move. Now, irrespective of whatever type of trader you are, be it a day trader, scalper, position trader, or even a swing trader, you can actually use the information you gather in this community to make your own independent trading decisions. So it's on this note I welcome you all once again to the Forex Money Mastery, and I encourage us all to engage in the comment section. If you have any questions whatsoever as regards to the financial market or any of the assets we are looking at, or you need some further clarifications, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. And do not forget to give the video a thumbs up if you have found the content of this video helpful and useful in making your independent trading decisions. And thank you very much as you do so. So with that being said, here we will be diving right into the business. And I see your comments, Sake Balata. Good morning to you. Glad to have you around with me. And so as usual, the first thing we are going to be doing this morning, our daily routine, is to keep tabs with the fundamental factors that is likely going to be influencing the sentiment in the market today. And for those of you who have been with me for a while now, we all know the implication of this, as if we tend to look at the economic calendar to identify economic events that will be influencing the sentiment in the market. And by checking this, we can identify how upcoming events might affect the character of price action. This helps us to further spot potential correlations between key economic releases and specific technical patterns on the chart, allowing us to time our positioning more effectively. Now, looking at the economic calendar for this week, based on the asset we have been monitoring so far this week, we have been focusing on economic features from both the United States and the United Kingdom economic dockets. And through the course of this week, we've had some high impactful events that definitely had influenced the sentiment in the market in one way or the other, which has also helped us to position ourselves for the moves we took during the course of the week. Now let's quickly do a recap, a summary of what the events were looking like and what their implications are on the currency assets or the instruments that we have been monitoring. So the week started with high impactful event on Tuesday, August 13th, and we were looking at labor oriented data from the United Kingdom, where we were looking at the claimant count change, the employment change, and of course the ILO unemployment rate. Now, one of the major highlights for that day was the unemployment rate, which came in a little bit lower than market had expected, and in fact lower than the previous month data. In fact, the previous month was at 4.4% in terms of unemployment, and the economists were projecting that we might be seeing a 4.5% in unemployment, but lo and behold, the data came in at 4.2%, which was a good sign, showing us how resilient the labor sector is in the United Kingdom. Then fast forward to later in that day, we were looking at the producer price index, which is usually considered to be an inflationary gauge data. And of course, the data came in below market had expected at 2.4%, way below the previous month, which came in at 3%. And now, what does this tell us? It tells us that inflation in the United States is easing, hereby increasing the sentiment that the Federal Reserve are likely going to be cutting interest rate next month. Now, fast forward to Wednesday, August 14th, we had the consumer price index from both the United States and the United Kingdom economic docket. Now, for those of us who do not know what the consumer price index is and its implication to the market, you see, the consumer price index is also considered to be an inflationary gauge data, which of course the Fed and the Bank of England usually monitor to decide the level of inflation in the country. Now, this measures the average change in prices by consumers for goods and services in the last 30 days. It comes in every month, and a higher than expected CPI data can lead to concerns about inflation in the economy, impacting market sentiment, as it may prompt expectations of tighter monetary policy to control rising prices. Now, when we look at the data that came in on Wednesday, we saw how the data came in below market had expected from the United Kingdom, and the same thing also happened in the United States, as the data came in just at market had expected for the month on month and lower than the market had expected for the year on year. Now, what does this tell us? It tells us that inflation is easing in the United States and the United Kingdom. And for the United Kingdom, it shows signs that yes, the inflation is easing too as well. And this further incites the idea that the Fed might likely cut interest rate, which is not a very good signal for the US dollar, as majority of market participants will be dumping the US dollar for a more profit yielding asset. Now, fast forward to yesterday, Thursday, August 15th, we were looking at the gross domestic product for quarter two from the United Kingdom. Well, this data here gives us an insight into how the economy of that had expanded during the course of the last quarter. So from what we saw from the United Kingdom, the data came in at 0.6% expansion, just exactly as the market had expected, which has further helped the pound sterling to catapult itself to new high, and of course take advantage of the dovish outlook coming in from the United States. Now, that was that yesterday. Then later yesterday, we saw the retail sales data from the United States, where this is also considered to be a key economic event that everyone wants to be looking forward to, as it gives an insight into the health of the economy and consumer confidence in the economy as well. And this also gives us an insight into the consumer spending power in that economy, influencing expectations about future economic growth. And one thing that everyone was looking forward to is this event, to see how well consumers are reacting to the latest development in the United Kingdom. And of course, a higher than expected data is expected to influence positively the US dollar. And if we look at the data from yesterday, we were looking at market were expecting a 0.3% expansion, which is a little bit higher than the previous month that was at a deficit of 0.2%. Now, the data came in with a whopping 1%. That's over 70% increase. Sorry, over 100 and over 200% more than the market had expected. And this, of course, influenced the US dollar positively yesterday. We saw a little bit of positive traction in favor of the US dollar. For those of us who are monitoring the XAUUSD and the GBPUSD, we saw the US dollar gain some traction before it started falling back into normalcy this morning. Now, as we prepare for today's trading session, we have two impactful events that we are going to be looking forward to today. And both of them are we have one from the United Kingdom, and we also have another one from the United States. Now, the one from the United Kingdom is the retail sales data, and of course I did mention the implication of the retail sales data, as it gives us an insight into the consumer spending in the United Kingdom. This data measures the total receipt of retail stores, representing consumer spending as well. Now, from the data we are looking at here, we had a deficit of 1.2% for the month of June, and market participants are expecting a 0.5% expansion for this month. And I don't know why this is not giving me this, because this data came in earlier today. Give me a moment, let me refresh this page so that we can see what the data set was showing this morning. Now, I think we had a positive we had a 0.5% expansion, just as market had expected, and this has further helped the British pounds to take advantage of that weaker US dollar we have been seeing since the beginning of the week. And of course, we are going to be looking into that chart in a moment and see what is going to happen, if it's likely that this momentum will continue to the upside, or we may see some profit taking activity today. So stay tuned in, as we will be going into the GBPUSD market dynamics in a moment. Then later on today, in about 5 hours from now, we are going to be looking at the publication from the University of Michigan, and that is the Consumer Sentiment Index. You see, this data here gauges the prevailing sentiment and confidence levels among consumers within the United States, hereby giving us an insight into potential shift in economic conditions. And it's important to note that changes in consumer sentiment can influence spending patterns, impacting various sectors and markets in the United States. And this is another data we also want to be looking forward to know if consumers are having confidence in the US economy at this particular point in time when inflation is gradually easing. Now, it's we have for last month we were looking at 66.4, and economists are projecting that we may likely see something a little bit higher than the previous month data. So let's look forward to see what the data is going to be like. Will it be just as market had expected, below expectation, or even beyond expectation? And one thing for sure, from a theoretical standpoint, is that if this data comes in higher than market had expected, we may see a positive traction in favor of the US dollar, and if it comes in below market had expected, we may see a negative traction. But if it comes in just as expected, there will be no surprise really, so it may likely not have any influence in the market. But one thing we do know here in this community is that the anticipation of this event usually has a way of influencing the sentiment in the market, and this obviously will reflect on the chart as price action. So what we are going to be doing next is to dive into the chart, and let's see how the market participants have been digesting the fundamental factors, the economic event, and of course the geopolitical situations in the global landscape, and using that information to navigate the current market dynamic. So as usual, we are going to be jumping into the USOILSPOT first of all this morning. And on the USOILSPOT, we've had some good situations through the course of the week, and it has been a roller coaster of buys, sells, and buys during the course of the week, and we were able to capitalize on these opportunities along the way. Now, for educational purposes, let's quickly run through what really happened during the course of the week and what led to the situation that made us to either buy or sell this commodity during the week. Now, at the beginning of the week, we had a simple trading setup where price action for the first 6 to 7 hours was confined within the $77 area and the $76.65 level, giving us a range bound structure, and of course making us feel comfortable, as we do understand that whenever we have this kind of range bound structure, we know that there is an indecision going on in the market, and we exercise patience, waiting for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line of that range bound structure to give us an opportunity to sell. And at no point in time did we see price break down the support line, so it was not we never thought of selling this asset at the beginning of the week. So it was more of looking out for buying opportunity. And in addition to that range bound structure was the fact that price action also broke out of the resistance line of that descending channel we identified on the higher time frame. Now, this further supported the bullish idea for us, and of course we did capitalize on the buy opportunity right above the $77 area. And of course we had multiple entries. We had additional positions at the breakout of the $77.60 area, and we rode that momentum all the way into the $80 level. Remember, we also had a buy position here, but that one did not do very well as we got stopped out in a loss. But the P&L for that position as at the second day of the week was on the positive side as we were able to scoop in over 400 pips from those two buy positions. Then during the midweek, we begin to see some bearish pressure resume in the market, and this was due to easing tensions in the Middle East as we were looking forward to the ceasefire intentions by the Israel-Gaza peace talk, and we also got some green lights that Iran might not retaliate the assassination of the Hamas leader in their terrain if this peace talk comes out positive. And this led to some easing concerns as regards to oil disruption from that particular area. And during this phase, market participants deemed it fit to start taking some profits off the chart, which resulted in that retracement move that started on Tuesday. Until this moment, price action had continued to find lower highs in this particular market. Now, during our live session on Wednesday, we had a beautiful trading setup ahead of that day's session. We had a range bound structure, first of all, where price was confined within the $79 and the $78.60 level. That was one scenario that we were looking forward to. And in fact, we were looking forward to when this retracement move that started on Tuesday is going to end. And on Wednesday, we were thinking that it had actually ended, where we were seeing some series of higher lows, and we were looking at a potential breakout of the $79 area to join the uptrend move, but that failed as we took advantage of we triggered that buy position, but it did not do very well at all. It took us out in a loss on that one. And then we also talked about the potentials the sellers also have in this market, as we did say that the bearish momentum we see here could move into the key level at the $77 area. Now, we said something about the structure that we will only look out for selling opportunities at the breakdown retest of the support line of that range bound structure, which interestingly shares a confluence with this ascending trend line we had here. And look at what happened. Price did break down the structure, came back to retest the structure, and boom, we saw price move all the way. And if you remember, I said my TP target will be around the $77 area, giving us over 150 pips to catch there. So as at the third day of this week, we were doing pretty well in the USOILSPOT, scooping in over 500 and approximately 600 pips in profit on the USOILSPOT. Now, during my commentary yesterday morning, for those of you who saw my commentary on my Telegram platform, I did mention that we're beginning to notice some buy pressure happen during the Asian session yesterday morning. And if we zoom into that structure, we were seeing this happen exactly above our key level for the week. And remember how we use our key level. When price action finds buy pressure above the key level, we want to be looking out for buying opportunities. And due to this observation yesterday morning, I decided that we will be buying if the $77.60 level gets broken to the upside. And look at what happened here. Though it did not last long, but we saw price move over 85 pips in our favor before the bearish momentum happened. And you do know how we do it in this community. Whenever price moves significantly in our favor, the next thing we do is move our stop losses, secure this position, and I do hope you did that. If you had done so, you must have been taken out of this position in with some small size profit or a worst case scenario break even. That is depending on where you had moved your stop losses to. So far this week, we've done pretty well on the USOILSPOT, and congratulations to everyone who actually capitalized on all of these opportunities and stayed faithful to our analytical approach. So well done to you guys. Now, as we prepare for the final trading day of the week, as market participants round off their trading activities in preparation ahead of the weekend, what are the chances that buyers can still come back into play this today? Or is it likely that this bearish momentum will continue to the downside? Well, before we go into the technical details, it's important for us to understand the major drivers that is influencing the sentiment in this market. We want to know what is going on behind the scenes that's actually been influencing how market participants have been behaving. Now, we have various factors behind the scenes. In fact, we have up to like 6-7 factors that is influencing the USOILSPOT so far this week. And top of the list is the escalating tensions in the Middle East. Now, the risk of supply disruption remains elevated due to the ongoing geopolitical tension. And of course, whenever there is geopolitical tensions like this, it usually supports US crude oil prices by increasing fears of potential supply shortages. Now, due to this, we usually see major countries start increasing their reserve by buying more crude oil just in case of if anything happens, and they can see something to bank on during the days where there is no oil to buy. So as a result of this, we usually see increase in demand, and this supported the price at the beginning of the week until we begin to notice here recent development of peace talks between Israel and Hamas, and the reduced concerns when Iran said if the peace talk comes out positive, they might not likely retaliate. Now, this led to some bearish traction, of course. Then another factor behind the scenes is the upbeat US macro data. We saw the strong US economic data releases. We saw the US data. We saw the retail sales data during the course of the week. We saw the CPI data as well, which is an inflationary data. We also saw the PPI data, all of which were showing signs that inflation is easing in the United States. And the implication of this is that there is likely going to be Fed Reserve interest rate cut next month, and the expectation of this Fed cutting interest rates in September could boost economic activities, and this may support crude oil prices as lower rates could increase fuel demand. And for those of you who have been with me for a while, you know the dynamics behind the increased demand when the US dollar it drops in value. So when the US dollar is cheaper, other currencies finds the US crude oil cheaper to buy, so they increase demand during that time. So this one factor here which also supports an uptrend scenario. And if we consider the fact that we are currently sitting on our key level, remember this key level was the area where price action started buying opportunities at the beginning of the week, and we saw what happened through the course of the week. Buy pressure around that area, buy pressure around that area, and right now we are back into that area. Are we going to see this area as a platform that will support new buying opportunities, pushing price to the upside again? Well, we are going to be talking about that in a moment. Then another factor I would like to mention here is the struggling US dollar. The US dollar struggles amidst this bet on Fed interest rate cuts. In fact, the CME Fed Watch 2 is also reporting over 70% sentiment in support that Federal Reserve will be cutting interest rate next month, and this is further exerting pressure on the US dollar. And also we know if the US dollar is dropping, the USOILSPOT tends to rise. Now, another factor we cannot ignore is the economic slowdown in China. Now, there has been concerns about a slowdown in China. Remember that China is the world's largest oil importer, and of course, whatever happens to the Chinese economy has a way of influencing how market participants will react in the US oil market. Now, because China is the largest importer of oil, if the economy is not doing very well, it is expected that they will reduce purchase of crude oil, which will affect the demand for oil in the market, exerting pressure on this commodity. So the implication of this is if there's a reduced demand from China, this could lead to lower global oil demand in the market. Now, finally, or let me say second to the final one, is the OPEX and EIA report we saw here on Wednesday and Thursday, where they did downgraded the demand forecast for the year 2024. So both organizations have downgraded their forecast for oil demand growth in 2024, and this could exert some bearish signal for crude oil prices, suggesting a weaker future demand. And if you're a future trader, you know this kind of situations. You want to be reducing your bets on the crude oil when you see such reports coming out in the media. So for me, this could exert some selling pressure, and in fact we're seeing that in the last couple of days in the market. Then finally is the unexpected US inventory buildup. We saw a tremendous increase in US crude oil stockpile during the course of the week, where the EIA reported over 2-point-something million barrels increase for last week, which is a good sign that the supply, the demand in the market is not strong enough to eat into the supply. And of course, you know how this is going to be influencing the sentiment in the market, as increased supply means that the commodity is surplus in the market and the demand is not as strong as the supply. So this could exert selling pressure on the US oil spot. Now we have contrasting views here, where we have some various factors that support the ascent of oil prices, and we have some other factors like the Chinese economy, sluggish Chinese economy, the EIA and OPEC Plus downgrade report on the oil demand for 2024, and of course the unexpected buildup in US crude oil stockpile, which could exert pressure on the oil prices. Now, how is the market digesting this information? How are the participants in the market reacting to this recent development? Is it positive? Is it negative? Well, let's look at the chart and see things from a technical standpoint. Now, looking at the current chart right now, you would agree with me that we are at a crucial juncture in this market, like I did mention earlier, the $77 area. Remember, this was our key level for the week, and you know how we use our key levels. As long as price remains above them, finding buy pressure above the key level, we want to be looking out for patterns and structures that support the idea of buying that asset. And if you remember vividly, at the beginning of the week, we were having our range bound structure right below the structure, and this was exactly that same area where we had our first buy position. And looking through the course of the week, you will see that despite the strong bearish momentum during the second half of the week, we saw how that same area became a barrier for sellers, as every time they tried to break through, they met strong resistance from the buyers. So you would agree with me with this information. We are at a crucial juncture. Now the question as we head into the final trading day is, will this area become another platform for buying opportunity today, or will this area be breached and broken to the downside? So our center of focus for today is the $77 area, where depending on how market participant reacts to the structure will determine whether or not we are going to be buying the US oil spot. So what this simply means is that we need to exercise patience at this juncture, just to watch and see how the market will react to it before jumping into any direction. So what I will be doing here is to wait. For instance, this candle still has about 36 minutes left for it to close. So I would like to see the candle close around this area, see what structural pattern it has formed within this zone. Then I will use that to navigate and strategically position myself for either buy or sell. Now, let me just give a visual representation of what may likely happen around this area and what we need to see to either buy or sell this asset. Now, for me to buy the US oil spot today, I will want to see continued buy pressure around this area, maybe forming some reversal setup like double bottom, inverse head and shoulder pattern, falling wedge. Whichever reversal setup I see here, I will mark out the neckline and then buy the breakout retest of the neckline to continue that uptrend move. and if price goes ahead to break out of the $77.60 level, I will be looking out for more opportunities to buy, and in fact a further breakout of this descending trend line will welcome more buying opportunities in this market. So you can see how we are going to be doing this. We need some patience around this area. If a reversal setup comes up, then we want to be joining this. Now this reversal setup can be looked out for on the 5, 10 or 15 minutes time frame for us to join that uptrend move. So once it happens, we mark out the neckline and then buy the breakout retest of the neckline. However, if price action breaks down the support line here and closes below the structure, you can see through the course of the week, price action has not closed below this area. Now, if it closes below the structure and continues to find selling pressure below this area, this will be a good signal that buyers are finding it difficult to climb back above the $77 area, welcoming selling ideas in this market. Then we can actually join a bearish move. But trust me, proud to the retail sales data today, I will be dropping some updates on the 50 minutes time frame, giving us a simple trading setup right there on the 50 minutes time frame that we will be using to enter any positions today. So this is my simple view on the US All Spot today. I hope I made myself very clear. If you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in. All right. I see you, ITK. Good morning to you, ITK. Happy Friday to you, and how well are you preparing for the weekend? Sharif Abdulkadiri, good morning to you too. Glad to have you around with us this morning. So, in the absence of no questions, I want to assume that we are all on the same page, and I do hope you've marked out these levels accordingly on your chart. And like I did say earlier, our center of focus for today is the $77 area, where we shall be monitoring how market participants react to this price level on our lower time frame. Look out for structural patterns that we are going to be using to position ourselves for the next move. And I did say that I will be sharing some updates on my Telegram platform on the 15 minutes time frame structure that we will be using to anticipate the retail sales data coming up today. So stay tuned in on my Telegram platform. So with that being said here, let's move on to the next instrument on our watch list for today. Stay tuned in. So the next instrument we are looking at now is the GBPUSD, that is the British pounds against the US dollar. And in fact, we did very well on the GBPUSD this week. This is one of the most profitable trades on our on our watch list for this week. I was able to hit my TP target during the midweek on the GBPUSD, scooping in approximately 200 pips from multiple entries on this asset. And of course, during the second half of the week, we saw how the price also capitalized on the weaker US dollar, getting more momentum, increasing and finding new highs along the way. So let's quickly look into the structure from an educational standpoint, just to have a deep understanding into how we capitalized on this opportunity and what led to the decisions we made. Now, during the course of the beginning of the week, we did acknowledge the fact that the momentum is looking very bullish despite the descending channel we identified on the 4 hours time frame. So I will not be going into the higher time frame, but if you do want to have an insight into what we talked about on the higher time frame, I would recommend that you watch my weekend video on the GBPUSD. It is right there in the description box of this current video you are watching, so you can check it out after the live session to have a detailed understanding into the background of this structural setup. So as at the beginning of the week, we had three parameters here that is going to be helping us navigate the structure during the first half of the week. One of which is the resistant line of that descending channel we spotted on the 4 hours time frame, remember? And when we have a situation where price is trading around the resistant line of a descending channel, we are either looking at price respecting the resistant line to continue the downtrend. That is, if selling pressure persists below the descending trend line, it could welcome selling opportunities. And if price breaks out of the resistant line, then it will welcome buying opportunities. So that is one parameter we were looking at the beginning of the week. Then second one was our key level at the 1.27500 area, and you know how we use our key level. Once we identify them, if price remains above them, we will be looking out for patterns and structures that support the idea of buying. And if price remains below the key level, we will be looking out for patterns and structures that supports the idea of selling. And at no point in time did we see price break down the support line. So it was more of price staying above the key level, above the resistant line of that descending channel. And of course, we also had a range bound structure identified around this important confluence. So we saw price for the first 10 hours of the week. It was confined within the 1.27610 and the 1.27470 area, emphasizing the prevailing uncertainty around that area, and of course emphasizing the importance of that current confluence we were in at the beginning of the week. And you know how we use our range bound structures in this community. Whenever we identify them, we wait patiently for price to give us a signal, which usually comes either in the form of a breakdown of the support line to give us an opportunity to sell, which obviously never happened, or the breakout of the resistant line to give us an opportunity to buy. And of course, we saw what happened. Price did break out of the resistant line of that range bound structure, and since that moment we have been buying the GBPUSD. Though it took a while for the market to gain some traction, but one interesting thing about the whole structure is that with our stop losses way below the support line, we were able to capture all the volatility through the first and second day of the week. And of course, we added more positions at the breakout of the 1.27875. We added more at the breakout of the 1.28100 area as we rode it all the way, hitting my TP target at the 1.28600 level. And for those of us who capitalized on this opportunity, well done and kudos to you. Now, during the midweek, we begin to notice some retracement move happened in this market. Retracement, which was characterized with a little bit of choppy market conditions, which further emphasized the level of indecision that was in the market at that point in time. And of course, this was not coming to us as surprise at all. Remember, we were looking at the economic calendar, and in fact, we saw some major economic events through the Wednesday and Thursday's trading session, which could be attributed to these choppy market conditions. Remember, we were looking at the CPI data from both the United States and the United Kingdom. We were looking at the GDP data from the United Kingdom, and of course the retail sales data from the United States on Wednesday and Thursday. And the market's anticipation of this event was quite indecisive, resulting into that choppy market condition. And if you remember vividly, during our live session on Wednesday, we had an entire new trading setup to help us navigate this current market dynamic, and this was it right here. Now, this was what I was able to come up with in preparation for the second half of the week. The first thing you will notice here is that we had an ascending trend line. In fact, we had a couple of them right there. After connecting the series of higher lows, as you will see here, we had the first one right here, and then we had the second one at this point that we have here. And you know how we treat our ascending trend lines. As long as price remains above them, we'll continue to look out for patterns and structures that support the idea of buying. Now, in addition to the ascending trend line was the fact that since price hit our TP target on Tuesday at the 1.287 area, we saw that for about 48 hours or 60 hours or so, the market was confined within a range bound structure between the 1.287 and the 1.282 area, emphasizing the prevailing uncertainty during this time frame. And usually, you know how we treat our range bound structure. We wait for price to break out or break down of the structure to give us an opportunity to either buy or sell. But one thing caught our attention here on Wednesday. We saw how the 1.282 area was serving as a demand zone throughout the course of the week, as every attempt by sellers to break through was always met with strong resistance from the buyers, as you will see here. So as a result of this observation, I did updated us on my Telegram and TradingView platform that we will be looking out for buying opportunities at the breakout of the 1.284, which lines up with the descending trend line here, this temporary descending trend line, which of course breaks out of it and added another position at the breakout of the resistant line of this range bound structure. So at this point in time, you should be having a minimum of 2 buy positions running in profit, and we should be having a total of, let's see, the first one is about 60 pips in profit, while the second one is currently running with about 30 pips. So approximately we have about 90 pips in profit at this point in time. Well done, and kudos to everyone who stayed faithful to our analytical approach. So it's high time you moved your stop losses. Let's secure some profit at this juncture, as we never can tell, the last trading day of the week could bring in some surprise, especially as market participants look forward to the US macroeconomic data coming up later today. So I would advise that in order to give enough breathing space for price action to move around, we want to be moving all stop losses around the second entry at the 1.287 area. Most stop losses here, so that the worst case scenario is we will not be taken out in a loss at all. Break even on the second position and about 30 pips on the first buy position at this point. Now, with a well-secured position at this juncture, what are the chances that this momentum will continue to the upside? Or are we going to be seeing profit-taking activity happen today, resulting in some bearish traction, which I doubt will happen due to the various factors that we have been looking at since the beginning of the week? So we are talking about the UK retail sales data, which showed some positive signal, and of course this boosted the pound sterling, strengthened the GBP, and reducing the likelihood of an imminent Bank of England interest rate cuts. Then we also had a strong consumer spending in the United Kingdom. Increased spending, of course, supports the pound sterling as it dampens expectations for further Bank of England interest rate cuts. Then we also have the Bank of England monetary policies, where the next rate decision in September could be challenging due to the mixed economic signal that we are currently witnessing, and this could experience some volatility depending on the Bank of England stance, and of course the path of least resistance for the GBP at this juncture is still looking very, very bullish. Now, we had a decline in the UK service sector's inflation. Lower wage growth and inflation in the service sector presented some mixed economic outlook and may weaken the GBP if inflation remains subdued at this point. But with what we have in so far right now, I still maintain that uptrend traction in that regard. Now, looking at the other side of the pond, that is looking at things from the US economic docket, the US dollar at this point is still not doing very well, and of course the British pounds will continue to capitalize on this dovish outlook from the Federal Reserve. We saw the retail sales data which came in on Tuesday, I think. Is it Tuesday or Wednesday? Which of course came in a little bit okay, theoretically diminishing expectation for aggressive Fed interest rate cuts, supported the US dollar for a short term, as we all saw. And of course we saw the US jobless claim count, which came in lower than market had expected, and of course supported the US dollar a little bit during the course of the week. And above all here, that is going to be being is a major factor in this market is the Fed's dovish outlook, the potential for interest rate cut next month. And we also had what's the name of this Fed official that spoke on Tuesday? I can't remember his name. Okay, I think Catherine Mann spoke last week Friday. I'm not sure, I can't remember who spoke this on Monday. They did emphasize, or they did confirm, that it is likely interest rate is cut in September, and this further is not supporting the US dollar at all. And I think the GBPUSD will continue to bank on this to gain some traction in that regard. Now that we have these fundamental factors in preview, what is the implication into the market? How is the market participant digesting this information? Well, looking at price action, it is quite obvious that the sentiment has been positive in favor of the British pounds. As you will see from a structural setup, price continues to remain above the ascending trend line. So if price remains above the ascending trend line, we would not be considering, it doesn't make any sense considering selling at all. Instead, we will continue to look out for patterns and structures that support the idea of selling. Now, the recent breakthrough is the 1.287 area, which we saw happen during the Asian session this morning. And in fact, for anyone who had missed out on that opportunity, let's wait and see if the market will come back, retest the structure, which interestingly shares a confluence with that ascending trend line to continue the uptrend move. So even if we see selling pressure resume anytime soon, we still have a bust up around the 1.287 and that ascending trend line, which could still be a support zone to continue the uptrend move. So we would not panic if we see selling pressure here. Price drops into the trend line, we look out for buy pressure on our lower time frame, let's say the 10 or 15 minutes time frame, to continue the uptrend move. So at this point in time, I'm not considering selling the GBPUSD, except if we see price break down both of this ascending trend line, and not just breaking down the ascending trend line, because a breakdown could still turn out to be a false breakdown. We want to see confirmations like retest of structure before jumping into a bearish move. But trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give us updates as at when due. So this is my simple view on the GBPUSD for today. I do hope this was quite simple enough and very comprehensive enough for us to adopt. Ensure we have your structures marked out on your chart, as they are going to be playing a significant role in guiding our trading decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. If you need further clarifications, please let me know. I'm here and willing to be of help in that regard. And do not forget to give that video a thumbs up. Your likes are a source of inspiration for me to continue to do more of this, and it also helps the YouTube algorithm to promote the video to a wider audience of traders who may find this content beneficial to them. And for those of you who had already clicked on the like button, thank you very much. I really appreciate from the bottom of my heart. And for those of you who are yet to do so, please do so right away, and thank you very much as well. See you in about 10-15 seconds from now. Stay tuned in. All right, so in the absence of no questions, let's take this as a positive feedback that we are all on the same page. So let's move on to the final asset on our watch list. So the final asset we are looking at this morning is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And we didn't do bad at all on the XAUUSD so far this week. We've done pretty well on this asset, both on my swing trading approach and of course on the scalping approach that we're running on the go challenge. In fact, on the go challenge, we were able to make over 18% of our portfolio size that we started this week with on the go challenge, scooping in some significant profit on Monday, and of course yesterday we did very well too as well. And for those of us who are part of this profitable journey on the XAUUSD, well done and kudos to you. Now let's quickly run through the technical details into this chart. Let's look at things from the beginning of the week, what led to the decisions that made us to continue to buy this asset through the course of the week. And in fact, I will be making this as short as possible, as I'm supposed to have kickstarted the go challenge about 5 minutes ago. So I just hope that you bear with me on this, but I'll make it as simple as possible for us all to comprehend. Now, as at the beginning of the week, we had a simple trading setup, of course, very simple trading setup here on the XAUUSD, where we saw price action was actually floating above our key level at the 2,425. Remember, this was our key level at the beginning of the week, and this key level here has been doing that same duty for us in the last couple of weeks. Remember, last week as well, it was serving as our key level. Now this week again, it is serving as the key level. And a quick reminder, our key level serves as a yardstick guiding our trading activity for the incoming week. So as long as price remains above the key level, we definitely want to be looking out for patterns and structures that support the idea of buying that asset. Now, in addition to price trading above our key level at the beginning of the week, we also had a range bound structure where we captured the character of price action for the first 12 hours of the week, seeing price action confined within the $2,433.50 level and our key level at the 2,425 area, emphasizing the prevailing uncertainty in the market during the specific time frame we are talking about here. And whenever we identify this kind of range bound structure, you know how we do it. We exercise patience, waiting for price to either break down the support line for selling opportunities, which obviously never happened, or the breakout of the resistance line, which is exactly what we did. And at the first trading day of the week, we ran this momentum all the way, though we never had multiple entries on the swing trading approach due to the nature of the structure that we are looking at. But during the go challenge, we were able to have multiple entries during the course of that breakthrough. And of course, we saw price move a whooping 400 plus pips in our favor before that consolidation phase started during the midweek stroke second half of the week, giving us this choppy market condition as price action was confined within a structure as well. And this was due to the anticipation of those US macroeconomic data we were looking at, talking about the retail sales data, the CPI, and of course the PPI data, which threw a lot of uncertainty into this particular market. And of course, during the second half of the week, we had some new trading setups to navigate this current market dynamics, as you will see here. Hold on a second. Let me bring this out. I hope I still have it. I hope I have not deleted it. Okay, yes, we still have it right here. So this was our setup prior to the second half of this week. We saw price still trading above our key level at a 2,425 area. That was one of the parameters continue to support the bullish momentum. And then secondly is the fact that price still remains above the ascending trend line. Remember, we had connected the series of higher lows here, giving us this beautiful ascending trend line. In fact, we have a couple of them right here, as you will see, projecting this to this one as well. We have this one, but the first one at the top is the major one we were using to navigate this market dynamic this week. Now, secondly, we had a demand zone around the 2,445 area, and this area, if you notice very well, you will see that this zone has been a demand zone since the beginning of this week. Look at what happened here. We saw price as soon as it got into this area. We saw how market participants deemed the gold asset cheap enough to buy. And even though we saw this strong bearish momentum following that positive US retail sales data, despite that strong bearish momentum to the downside, we saw that as soon as price came into that demand zone again, we saw buy pressure resume around that area. The same thing also happened yesterday, as you will see here. Buy pressure resumed again from that particular level. Now, if you would ask me at this point in time, the path of least resistance for the gold commodity is still looking very bullish, despite price confined within that range bound structure you are seeing on the chart right now. However, if we take into consideration the fundamental factors behind the scenes, there are some little development lately that could be exerting selling pressure on the gold prices. Now, one of which is the US Treasury bond yield. Recently, in the last 48 hours, we have been seeing a rising bond yield, which makes gold less attractive as investors prefer assets with return, and they may likely be pulling out their funds from the gold into the US Treasury bond yield due to this renewed buy pressure surrounding this market. And of course, we also have the Middle East ceasefire talk, which is ongoing right now. There has been progress in the cease talks, and this could ease geopolitical tensions. And of course, when there is reduced geopolitical tension or easing tensions, the appeal for safe haven asset like gold usually reduces. And besides these two factors here, other various factors behind the scenes still support the gold to continue to find higher highs. Now, will this recent US Treasury bond yield rebound and the easing tension in the geopolitical tension become a support for downward pressure for the gold commodity today? Well, let's look at how the market has been digesting these contrasting views and what are the intentions that are very likely to happen today. Now, let's go back into the chart and look at what is going on here. So, in order to guide my trading activity for today's trading session, the last trading day of the week, I have a simple structure within that range bound structure I talked about earlier, and this is this range between the 2,460. Look at what has been going on here since the New York session yesterday. We have a range bound structure just exactly above the ascending trend line, as you will see here. So we have a $8 range bound structure where there has been some indecisive conditions around that area for a while, I think for about 18 hours or so. And look at how beautifully it is sandwiched between the descending trend line here. Look at the descending trend line here, which captures the series of lower highs since Tuesday's session, and of course this ascending trend line right here. So we have this range bound structure trapped within these two trend lines, where I want to be looking out for the breakout or breakdown of the structure to give me an insight into where price is likely going. But I will be leaning towards an uptrend scenario due to the fact that price is still sitting above a robust demand zone. Remember, I talked about this earlier: buy pressure, and buy pressure around this area. In fact, if I want to be selling the XAUUSD, I would rather want this demand zone to be broken to the downside. If it's not broken, I wouldn't feel comfortable joining a bearish momentum, even if I see selling pressure around this party. So as a result of this, I already have a buy position triggered above the 2,460. For those of you who are going to be in the go challenge, you will be seeing that position. I currently have a buy position triggered above the 2,460 with the hopes that price action will maintain a momentum above the structure of least resistance for gold is still looking very bullish. So above the 2,460 is our comfort zone for buying opportunities in this market. So we could look out for buying opportunities around that area. However, In as much as we're looking out for buying opportunities, you know how we do it in this community. We also try to keep tabs with the potentials that sellers could come in at any point in time. Today is the last trading day of the week. We are looking at the US Consumer Sentiment Index report, which is coming up in about 3 to 4 hours from now, which could also influence the dynamics in this market. And if this happens, that the data comes in higher than market had expected, it could incite a positive traction in favor of the US dollar, resulting into selling pressure, which for me I doubt will happen anyways. But if it does happen, we want to also be on standby to capitalize on that opportunity. Now, what is it that we will see on this chart that will make us feel comfortable selling the XAUUSD? If you would ask me personally, I would rather want to see price break down that demand zone before jumping into any sell position. I want to see a breakdown, retest for confirmation's sake before jumping into that decline. However, if we look at the distance between the support line of this range and that demand zone, we are looking at over 1,000 pips in that regard. Now, in this situation here, are we going to miss out on that opportunity before jumping into a sell position at the breakdown of that structure of the demand zone? Well, unless I see something significant happen within this range bound structure. And what I mean by significant is price breaking down the 2,452 level, breakdown, not just breakdown, because I'm not having a sell stop order there, because it could turn out to be a false breakdown. So I want to see price breakdown, then retest the structure where continued selling pressure tells me that buyers are finding it difficult to stay above the 2,452. Then I would like to join a bearish momentum to the downside, and maybe in a short term having a TP target within the demand zone. That's about 1,000 pips to catch there if price does that. And if we see resumed buy pressure around this, I think this is too much for today, for all of this to happen today. Maybe it will start next week, but this is what I'm looking at this point. So my selling in a short-term view will be below that support line at the 2,452 area. But with that being said, I still have a strong feeling that price will continue to rise to the upside. So this is my simple view on the XAUUSD today. I hope I made myself very clear. But if you have questions or you need some further clarification, maybe there is an area you are finding it difficult to really understand, or just let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10-15 seconds off. Let's see if there are any questions whatsoever, while you also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions today. All right. I see you, Odueno. Good morning to you, Odueno. Good to have you around. It's been a while since I saw you. I haven't seen you in the Go-Go Challenge this week. Hope you're doing very well, Odueno. Sake Balata. Oh, you're very much welcome, Odueno. I'm glad you found the gold analysis very useful. Thank you very much. Sake Balata says, oh, I'll take that as a compliment. Thank you very much. Now, Sake Balata asks, how do you find all the levels? Does this time frame matters? Good question there. Sensitive question there. So let me go again the question. He said, how do you find all the levels? Does time frame matters? Well, levels are, if you have been watching my videos on the my weekend videos, you will see how I've been identifying levels, especially my key levels, my support and resistance levels. Those are the major levels you want to be identifying on your chart. Your support levels are levels where you see buy pressure resume from, and your resistance level are areas where you see selling pressure resume from. Let's say for this case scenario where I did have a range bound structure between the 2,460 and the 2,452. Of course, you will see that the support line has been showing buy pressure here. You can see buy pressure around this area, so that is my support line. And if you look at the other side, you will see selling pressure when price comes into that area. Selling pressure, so that is the resistance line of that structure. And for the key level, watch my weekend videos. You will see how I identify key levels and how they serve as they have been known to be a key determinant of the direction of price action at every point in time. Now, I hope I answered that question. Now, does time frame matters? Of course, yes, time frame matters. That's why we have different time frames, and depending on your experience in the market, you will have a preferred time frame. Now, for me as a trader, I'm a natural swing trader, and I usually use my daily and 4 hours time frame to have an holistic perspective into market, knowing the major trend of the market, and of course identify the key level that I will be using to navigate that structure during the course of the incoming week. Now, the 1 hour time frame is my execution time frame. This is where I set my buy stop, my buy or sell entries. This is where I set my stop losses, and of course identify potential TP target. Now, if you are a scalper, which is something I'm recently going into, and that was why the Go-Go challenge came into on board, I'm into exploring the scalping approach using a smaller size account, and that is why we have the Go-Go challenge platform. Now, in the Go-Go challenge, in the scalping approach right now, you want to be going into a much more lower time frame. Now, if you've been following me on the Go-Go challenge, you will see that we basically focus on the 15 minutes time frame to identify the support and resistance level, which is more or less an area for supply and demand as well. Now, if we identify the structures, then we scale down to a much more lower time frame, like the 1 minute or 30 seconds time frame, where we look out for trading opportunities to capitalize on that momentum where price action is going. I guess you want to be part of the Go-Go challenge to see how we do this in real time, and of course we will be welcome to have you around with us. All right, so I hope I answered your question, Sake Balata. Please let me know in the comment section if I did, or if you need some further clarifications. I will be willing to be of help in that regard. So with that being said here, I think we have come to the end of today's Forex Money Mastery session, and it has been a wonderful day with you guys. But it hasn't been encouraging as regards to your likes. We had over 12-13 people on board today, but the likes we are looking at here is we only have 5 likes. So that means there are still some of us out there watching me right now and who are yet to click on that like button. I know it doesn't mean anything to you, but for me it means a lot to me. It serves as an inspiration for me to continue to do more of this, and of course it also helps is one way you are actually helping this community to grow. By clicking on that like button, the algorithm identifies this video using the number of people watching in conjunction with the number of people who liked it, to post the video to a wider audience of traders who may find this content beneficial to them too. So why not click that like button? It doesn't cost you anything, and in fact you are also helping this community to grow as well. Thank you very much as you do so. And for those who had already clicked on the like button, you guys are wonderful. I really do appreciate your support. So Sake Balata says thank you. Okay, you're very much welcome. All right, it's okay. Looking forward to have you around anytime soon. So it's on this note we are going to be calling it a day here on the Forex Money Mastery end of the week review. It has been a wonderful moment with you guys. I really appreciate every single moment with you. And of course, we were able to take all of the financial instruments on our watch, though we are eating into the Go-Go challenge time, but that is okay. So we were able to take on the USOILSPOT the GBPUSD, and of course my favorite, the XAUUSD, where we were able to identify simple trading opportunities that we are going to be using to navigate today's market conditions. And I do hope you marked out these levels accordingly on your chart. If you have done so, well done, kudos to you all. All we just need to do right now is exercise patience, and let's see how allow these structures to mature. And it's important to always remember that every decision we make in the financial market is more or less an educated guess. Hence, we need to have a well-defined risk management strategy in place. And for those of you who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of my subsequent editions, and that is on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start the new week on a positive note. And if you are yet to subscribe to the channel, I guess something you want to be doing right now. I encourage you to do so right now, as I will be sharing my ideas in preparation for next week's trading session during the course of the weekend. And of course, we are going to be running the market prep too on Sunday, where you tend to come on board, giving me the asset you are going to be looking at for the week, and asking me for my opinion and thought process behind those structures. So I look forward to seeing you during the market prep coming up on Sunday. So it's on this note. Thank you very much, ITK. I really appreciate your support, and see you soon as well. So it's on this note we have come to the end of today's Forex Morning Mastery. I wish you all the best of luck today, and looking forward to seeing you in the TradingView, Telegram, and of course during the Go Challenge as we continue to monitor price action. So I wish us all the best of luck. Do have a wonderful evening, and do have a wonderful weekend as well. Bye bye.